known as Malaysian Government Security, are issued by the Malaysian government to generate finance from the country's domestic capital market. Via market infrastructure that is owned and runs, the Central Bank Negara Malaysia support the government as a banker, advisor and help with the planning and issuing of securities. The Malaysian government issued Malaysian Government Instrument MGS as a long-term interest-bearing debt instrument to obtain money for development expenses from the local capital market. Local corporation can obtain funding from the bond market by issuing bonds, medium-term notes and commercial paper in addition to Malaysian government securities. One of the division of the Malaysian government securities, which are long-term Islamic government security issued in accordance with accepted Sharia principle, is the Malaysian government investment issue. The growth of the Malaysian government investment issue market seeks to reinforce Malaysia's leadership in global Islamic finance while also expanding the domestic sukuk market in line with the country promotion of a dual banking system. The investor in Malaysian bond market, which include a wide range of institutional investors such as insurance firm, pension fund, foreign government, central bank and asset manager, are another market participant of Malaysian government securities. By giving the secondary market important liquidity, these investors support the efficiency of the market. 50% of bonds are owned by long-term investors due to the Malaysian investment good credit rating, progressive and inclusive financial market law, robust infrastructure and significant secondary market liquidity. As a result, competitive auction for security issued by Malaysian government typically begin 3 business days in advance and end 1 business day ahead of the intended issue date. In this auction, the central bank appointed primary daily take part directly, offering proprietary bids and bids on behalf of their clients.
So, who are the market player for the Malaysian government securities? Bank Negara Malaysia is the primary insurer of MGS and is conduct auction and manage the issuance of MGS. Primary dealer is a financial institution. It also includes the commercial bank. For institution investor, it can be bank and insurance company. Next is a retail in foreign investor. The individual can also participate in the MGS market through the various channels. And the last one, Securities Commission and Bursa Malaysia, also the market player for this instrument.
Okay, next is the benefits of investing in Malaysian government securities MGS. When it comes to investing in Malaysian government securities, there is a lot of benefit to be considered. One of it is MGS provide a regular interest payment to their investor. It's like receiving a consistent income or getting a paycheck from investment. This interest payment is typically made twice a year, so you can expect a nice boost to your income during that time. The amount of interest you receive is determined by the coupon rate associated with the specific MGS being invested. Therefore, the higher the coupon rate, the higher the interest being received. So, by holding MGS, the investor can enjoy steady income flow while their investment grow. Secondly, investing in MGS also offer low level of risk involved. MGS is backed up by the Malaysian government, so it is secure investment. The government guarantee repayment and reduce the risk of default. Investing in MGS gives you a peace of mind and a sense of security. It is a smart choice for cautious investor or those who seeking for stability in investment. Therefore, MGS helps you to build a strong financial future with minimized risk. Lastly, investing in MGS also offers benefits in liquidity. Liquidity means that the investor have the ability to easily convert their MGS investment into cash whenever they need it. It is super handy for unexpected expenses or taking advantage of other investment opportunities. You have a peace of mind knowing that your money isn't tied up and can be accessed anytime. It's like having a financial safety net for life ups and downs.
The main reason why Malaysian government security issues are to raise funds from the domestic capital market for the government development expenditure and working capital. The second are Malaysian government security were issued to fulfill the local banks, insurance company and employee provident funds and investment obligation. Malaysian government security were issued to finance Next is to allow Islamic banks to keep the marketable documents that fulfill their statutory liquidity criteria. Moreover, corporation can raise money by issuing bonds to finance expansion, purchase equipment and repay their debt. Government can avoid increasing taxes or reducing other budgetary categories each time they require additional funds for a project by issuing debt. Lastly, bank invest Malaysian government security in order to increase liquidity and profits.
Characteristic does the MGS have? Malaysian government security is a long-term bond issued by BNM, regularly issued 3-year, 5-year, 7-year and 10-year MGS as part of an effort to develop a benchmark yield curve. Malaysian government security also lengthened the benchmark yield curve by issuance of 15 to 20 years MGS. Additionally, callable MGS has been introduced since 2006 and provide the government option to redeem bonds at par by giving advance notice of 5 business days to bondholder ahead of maturity date. Annual auction calendar outlines the timing, tenure and issuance method. The methods are by new issue and reopening. These outlines are pre-announced at the end of year for the subsequent year issuance to enhance market certainty and transparency. The actual issuance size is announced a week before the issuance date. The typical issuance size range from 1 billion ringgit to 4.5 billion ringgit depending on the requirement of government finance. Malaysian government security is a security with high liquidity and the most actively traded bond in the Malaysian bond market. The secondary market for benchmark security is liquid with daily average transaction from 100 million ringgit to 500 million ringgit. 10 million ringgit is standard for every transaction per lot. Malaysian government security get or raise funds from the domestic financial market for development expansion. These coupon bearing are semi-annual basis payment. Rate take to business day to settle and quote based on a price to 2 decimal points. There are no other payment needs, neither stamp duty nor commission are paid on the transfer of the security, but broker fee is payable for transaction via money broker.
Bank Negara Malaysia usually issues benchmark security for the creation of benchmark yield curve include 3-year, 5-year, 7-year and 10-year. To extend yield curve, 15-year and 20-year bonds also have been issued. MGS tenure can be a medium to long term of up to 30 years. MGS are fixed rate, coupon bearing bonds with bullet repayment of principal upon maturity and annual tenure, detailing the date, duration and issuance mechanism will be released at year's end for issuance in the following year. The size of issuance typically varies from RM1 billion to 4.5. Okay, now this is the table of the government securities. Based on the table, we can see that 3-year tenure, the coupon rate is 3.906% and the highest trading rate is 3.48% and the closest trading rate is also 3.48%, which brings the total volume of RM 45.57 million and the daily change, which is BPS for 3-year is 0. Next, for the 5-year tenure, the coupon rate is 3.519% and the highest trading rate is 3.61% and the closest trading rate is 3.57%. So, the total volume is 111.57 million and the daily change for the year 5 is negative 3. For the 7-year tenure, the coupon rate is 4.498%
The highest trading rate is 3.76% and the closest trading rate is also 3.76% and the total volume is RM36 million and the daily change of year 7 is -1. Lastly, for the 10-year tenure, the coupon rate is 4.642%. For trading yields rate, the highest is 3.58% and the close is 3.82%, which means the total volume is RM335.1 million and the daily change is -2.
To put it briefly, Malaysian government securities offer a dynamic and brilliant investment landscape, making them essential to the national financial system. Managing the issuance process and supervising important parties such as primary dealers, institutional investors, retail investors, and international participants like negara Malaysia play a pivotal role. The versatility of Malaysian government security market is seen in the range of bond maturities offer from 3 to 20 years, which cater to the diverse needs of investors. Government use Malaysian government security issuance as a strategic tool to raise money for spending of development retail project, and the way it has changed over time show how flexible it is in the response to shifting budgetary requirements. Diverse participants bring benefit to the market, boosting stability and liquidity. Market integrity is guaranteed by regulatory control from the Malaysian Securities Commission, and Malaysian government securities trading is facilitated by Bursa Malaysia. Because of Malaysian government security low risk profile, fixed interest payment and government existing investors are drawn to this safe and dependable investment opportunity. The market is becoming more diverse with the introduction of Islamic financial instruments. The issuance process is very clear with the annual schedule and bond issue size disclosed. Individual and institutional investors find Malaysian government security transaction to be a desirable alternative due to their high liquidity and efficiency, as well as the absence of stamp duty on transfer. Fundamentally, investors